You're about to see breaking analysis that cuts right through the noise. Because what just happened with NVIDIA, big tech, and the Federal Reserve could reshape the next phase of this market cycle. Over the last 24 hours, we've heard a narrative shift that almost everyone is missing. And trust me, this is the kind of blind spot that creates massive winners and massive losers. From AI CapEx mania, to retail pressure and speculative names, to a Fed that may not deliver the cut everyone was betting on. Things are moving fast. So, before we get into my full breakdown, let's watch the key clip driving all the buzz.
Mark, good morning. Let's think about then what we've learned over the last 24 hours. Have you taken away anything material with regard to either specifically NVIDIA or the big tech names that's reshaping your thinking at all, or are we still waiting for more confirmation there?
I don't think that has been a big game changer. That's in the context that we always kind of knew from the earnings previously this season that NVIDIA earnings were going to be very strong. They are the big beneficiaries of the massive AI CapEx bubble that we're in. And we've talked a lot over the last few weeks that the temporary pullback in stocks is not the bursting of the AI bubble. We expect the AI bubble to inflate significantly further into 2026. We don't know the exact timeline of when it's going to burst, but it does not appear we're close to bursting yet. Now, the other dynamic we've talked about in the short term is the short-term pressure on retail favorites, momentum stocks, some of the frothier names, some of the AI adjacent stuff, driven by particularly what's happening in the crypto sector. We felt that wasn't fully exhausted yet. I'm not convinced that NVIDIA earnings really changed that picture either. So I feel like we're still in the same narrative that AI bubble has much more to inflate into next year. Does it mean we start immediately reinflating from here? Have we already? Is this the time to buy the dip? I'm not completely convinced on that. I think that the other news we got yesterday, which was more narrative changing, were the Fed minutes. And I think now people are getting increasingly suspicious that we will get that December Fed cut. And maybe that's the more important marginal news we got, and therefore there's still a bit more in this pullback to come in the next couple of weeks, particularly in the frothier names, maybe not the good quality AI names.
All right, so here's what matters. Nothing in NVIDIA's blowout numbers changes the core theme. We are still deep inside one of the largest AI-driven CapEx bubbles in market history, and that bubble isn't popping yet. If anything, it's still inflating. But the short-term pressure on retail favorites and high beta momentum names, that remains real. Crypto weakness, frothy small caps, and spillover sentiment are creating a temporary drag that strong earnings alone cannot erase. The real narrative shift comes from the Fed minutes. Markets were positioned for a December cut, and now that confidence is cracking. If the Fed doesn't cut, it's not because something broke. It's because the economy isn't weak enough. That means more short-term tightening on valuations. But ironically, it keeps the bigger AI bubble alive even longer, especially under the current administration, where policy remains aggressively pro-liquidity. So the takeaway is simple. The macro pressure isn't gone, but the big bubble hasn't burst. Quality megacaps will keep benefiting. Speculative froth? It may still have more downside in the next few weeks.
If we don't get a Fed cut in December, is that a problem? Because you could argue the next Fed chair is going to cut rates aggressively and I can wait. Or is it a problem because the funding pressure is increasing and we could have an issue into year end?
I don't think it's a problem, first of all, because they won't cut unless, it's clear they need to. I'm not convinced that it's obvious they need to. At some point, obviously, when the US economy slows down hard, they're going to cut super aggressively. I don't think they need to be going for a preemptive cut now, and I don't think the US economy is careening off a cliff edge just yet. So therefore, I don't think they should be cutting. I don't think it's a problem. The funding is a concern, it is a worry, but the cut's not the marginal issue that decides that. So no, I don't think a lack of a cut's a big problem, even if it will weigh on asset prices in the short term.
Is that what is propelling some of these tech stocks higher? You have the NVIDIA story on one hand, you have this kind of circularity, you have all these investments, all this fiscal spend. How much of that rally is dependent, though, on the Fed kind of greasing the wheels?
I think it's clearly a marginal positive driver. It would be foolish to dismiss it. I don't think it's the most important dynamic here. Yes, one of the things that fueling valuations is that we are always, under Trump administration, going to get Fed policy which is too easy for the economic fundamentals based on orthodox economic policy, and that it helps asset prices. But the AI bubble is its own theme, and it's more dominant, and we're at the inflation stage of incredible CapEx spending, which benefits some of the big names out there.
This is the Cryptagon. Stay sharp, stay informed.